Welcome to Business Book Daily, where we pull one useful idea from one business book and turn it into something you can actually use. Today's book is Money Master the Game by Tony Robbins. Robbins is an author, entrepreneur, speaker, and performance coach known for teaching personal development, business growth, and financial decision-making. Before we get into the book, today's episode is sponsored by CommissionOnly.com. Want to sell more without adding fixed sales salaries? Many companies hire commission-only reps, experienced sellers who get paid only when they produce. Post your opportunity on CommissionOnly.com and get in front of motivated reps who are already looking for performance-based roles. That's CommissionOnly.com. Now back to Money Master the Game. The big idea is simple. Money becomes less confusing when you stop treating it emotionally and start managing it systematically. Most people work hard for money, but they never build a clear system for making money work for them. They save randomly. They invest emotionally. They trust advice they do not fully understand. They underestimate how much fees, taxes, bad timing, and fear can hurt long-term results. Robbins argues that financial freedom is not only for Wall Street experts or people who already have millions of dollars. Ordinary people can improve their financial future by understanding investing basics, controlling fees, managing risk, and building a long-term plan. The point is not that money becomes easy, it does not. The point is that money becomes more manageable when you follow clear rules, invest consistently, avoid common traps, and design a system that protects you from panic and bad advice. That matters because financial stress affects almost every part of life. Better money decisions can create more freedom, fewer emergencies, and more choices over time. And that is a very different goal from simply earning more and hoping it all works out. The first lesson is to become an investor, not just an earner. Earning money matters, of course. It is hard to build wealth on good vibes and a coffee punch card, but income alone does not create freedom if every dollar gets spent. The goal is to turn part of every paycheck, profit, or bonus into assets that can grow over time. That means treating investing as a habit, not a once-in-a-while decision you make when the market feels friendly or when a very confident person at dinner starts talking about their portfolio. The mindset shift is simple. Income pays for today, but assets help build tomorrow. The second lesson is that fees quietly destroy wealth. Small fees can look harmless. 1% here, a management fee there, a fund expense, an advisory charge, a transaction cost. A hidden fee buried so deeply in the paperwork it might as well have its own tiny apartment. But over time, small fees can take a large share of long-term returns. This is one of the most practical ideas in the book because it gives people a clear place to look. Understand what you are paying. Understand who is getting paid. Understand whether the value is worth the cost. A fee is not automatically bad. Good advice can be worth paying for. But unclear fees, unnecessary fees, and high fees that do not add enough value can quietly weaken your financial future. The third lesson is that asset allocation matters more than predictions. Trying to guess the market's next move is difficult, even for professionals. People love predictions because predictions feel smart. They give the illusion of control. They also age badly, sometimes by lunch. A stronger approach is to decide how your money should be spread across different types of assets based on your goals, risk tolerance, and time horizon. That mix matters because different assets behave differently. Some may grow faster but swing harder. Some may be steadier but grow more slowly. Some help protect you when markets drop. The point is not to predict every market move. The point is to build a plan strong enough that you do not need to. The fourth lesson is that risk control is part of wealth building. Good investing is not just about chasing high returns. It is also about avoiding losses that can set you back for years. This is where cash reserves, diversification, lower debt, and a clear plan matter. When people have no plan, fear often becomes the plan. They sell when markets drop. They buy when everyone is excited. They make decisions from panic, pressure, or social proof. Risk control helps protect you from yourself. That may not sound glamorous, but it is powerful. A good financial system should help you stay steady when the headlines get loud. The fifth lesson is that financial freedom needs a number. More money is not a plan. It is a wish wearing a calculator. Robbins pushes readers to define what financial security, financial independence, and financial freedom actually mean in numbers. How much do you need for basic security? How much income would cover your current life? How much would give you real flexibility? What would enough look like? Once you know the target, money decisions become easier to prioritize. You can see whether a decision moves you closer to the number or farther away from it. That clarity matters because vague goals are easy to ignore. Specific numbers force better choices. So how do you apply this? Start by reviewing how money moves through your business and personal life. Look at income, expenses, savings, debt, taxes, and investments. The goal is to see the full picture clearly. Next, identify money leaks. These could be unnecessary subscriptions, high-interest debt, weak cash reserves, poor pricing, expensive investment fees, or business spending that no longer supports growth. Then create a simple rule for saving and investing. Decide what percentage of income or profit will be saved or invested before the rest is spent. Automating this can help remove emotion from the decision. Finally, build a risk plan. Keep enough cash to handle surprises, avoid overexposure to one investment or one customer, and review major financial decisions before pressure hits. The goal is not to predict every problem. The goal is to stay steady when one arrives. Here are 3 insights worth sharing. First, financial freedom starts when money stops being handled emotionally and starts being handled systematically. Second, fees are easy to ignore because they look small. Over time, small investment costs can become one of the biggest drains on wealth. Third, the goal is not to predict every market move. The goal is to build a plan strong enough that you do not need to. Money. Master the Game is worth reading if you want a plain English introduction to investing, fees, compounding, risk, and long-term financial planning. It is also useful if you feel overwhelmed by money decisions and want a clearer system for building financial security. You might skip it if you want a short tactical investing checklist instead of a broad personal finance guide. Today's closing sponsor is memoirghostwriting.com. Many of the best business books begin as ideas leaders have been refining for years. Frameworks, philosophies, and lessons learned the hard way. Writing the book forces those ideas into clear form, and once they're on the page, they can travel far beyond a single conversation or presentation. At memoirghostwriting.com, we write memoirs and business books for entrepreneurs, founders, executives, and industry experts. We handle the interviews, structure, writing, editing, design, and publishing, so the final product is polished, professional, and built around your voice. If you've ever thought about what a business book could do for your authority, speaking, consulting, lead generation, or legacy, visit memoirghostwriting.com. That's it for today's Business Book Daily. One book, one useful idea, and one smarter way to build.